Welcome back to the channel. Today we're unpacking what might be the most dramatic series of updates surrounding Internet Computer Protocol, better known as ICP. And trust me, this breakdown isn't just another recycled echo chamber of hype, it's a reality check that the community has desperately needed. The narrative around ICP is shifting, and whether you're holding, trading, or just curious, what's unfolding right now could reshape how investors view this project moving forward. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. Let's start with what the community itself has been buzzing about. A well-known contributor, iCaffeinator, recently highlighted a bold new proposal aimed at reshaping ICP's tokenomics. If approved, it could accelerate deflation 4 times faster than the current pace. That's not just a tweak, that's a potential game changer for how supply and demand interact on this network. Now, before we dive into that, let's zoom in on the price action. It's been messy, to put it mildly. The charts recently showed ICP failing to break out of a minor consolidation range. The bears swooped in and slammed the price downward, almost as if they owned the territory. Technical analysts have been eyeing possible short setups around these levels, with targets as low as $4.67. On paper, the risk to reward looks attractive, but I've seen this setup before. It could just as easily flip into a bear trap. In short, tread carefully. This market is more unpredictable than a coin toss in a hurricane. Risk management isn't optional here, it's survival. Adding fuel to the volatility, we just saw a liquidation event that shook not only ICP, but the broader crypto market. Buried Cumming reported that in a single 24-hour span, more than $1.5 billion worth of crypto positions were liquidated. Let that sink in. That's enough capital to fund an entire nation's GDP for a year, gone in a day. Yet despite this carnage, open interest in ICP futures continues climbing, nearly matching the levels last seen when ICP traded around $20. The real question is whether this swelling open interest is a warning sign of looming volatility, or simply evidence of traders doubling down despite the risks. Then came the firestarter claim that really ignited debate. According to Real Ale in Crypto, Tom Lee, yes, the Wall Street veteran known for bold predictions, suggested ICP could soar between $420 and $1,000 this cycle. Now, while Lee has an impressive track record on certain calls, let's be brutally honest. For ICP to rally from its current levels to 4-digit territory, adoption would need to skyrocket in ways we've rarely seen outside of Bitcoin's meteoric rise. Could it happen? In theory, sure. But price predictions like these, while great for generating clicks, can be devastating for investor psychology. If you're betting the farm on these moonshot targets, you're setting yourself up for disappointment. But it's not all doom and gloom. In fact, some fundamental metrics are showing real strength. Data from ChainSpect highlights that over the last month, ICP joined the ranks of Solana and Stellar as one of the highest performing blockchains in terms of live transactions per second. That's not a vanity metric. TPS directly reflects how much throughput a network can handle in real time. It proves that the underlying infrastructure is solid. Still, and here's where the nuance comes in. Strong technology doesn't automatically translate into strong price action. We've seen countless startups with brilliant tech collapse because the adoption wasn't there. The critical question every ICP holder should ask is, are you here for the tech or for the gains? Another encouraging sign comes from developer activity. According to analysis by CryptoWaves shared via Liliana Bodo, ICP is absolutely crushing it on GitHub. In the past 30 days alone, ICP registered over 421 notable development events, outpacing even giants like Chainlink. This is enormous because developer engagement is the lifeblood of blockchain ecosystems. Without constant building, innovation stalls and projects suffocate. The fact that ICP leads the pack here suggests that beneath the surface-level price weakness, the ecosystem is still thriving. To me, that screams long-term potential, even if the short-term charts look ugly. Speaking of charts, Alpha CryptoSign recently outlined ICP's technical setup as a horizontal channel, with support anchored at $4.50 and resistance around $6.20. Right now, the price is once again testing that lower boundary after tumbling from mid-range levels. If $4.50 holds, the channel survives. But if it breaks, we could be staring at accelerated downside. And let's be real, channels never last forever. When they eventually break, the move that follows is usually sharp and unforgiving. The question is, are you prepared for that kind of volatility, or are you banking on yet another miraculous bounce? Now here's a stat that floored me. According to reports, a staggering 61.8% of all staked ICP is locked for 8 years. That's not a typo, 8 years. His equates to roughly 26.8% of the total circulating supply being locked and untouchable. Over just the past year, 8-year stakes increased by 8 million ICP, while inflation added about 14.5 million new tokens. Do the math, and you'll see that more than half of the newly minted supply is getting locked up right away. From a tokenomics perspective, this creates artificial scarcity, which is smart. But whether it reflects genuine long-term conviction or just holders chasing staking rewards is up for debate. This is where the launch of Caffeine AI comes into play. The project's success or failure could be the catalyst ICP desperately needs. If it delivers real adoption, reducing inflation and boosting staking simultaneously, it could finally flip the narrative. But the flip side is sobering. Without meaningful user adoption, no amount of staking mechanics can keep the price afloat indefinitely. Scarcity is powerful, but demand is the other half of the equation. Without it, scarcity alone can't save a project. Zooming out to the broader crypto market, the timing here is uncanny. Historically, October has been Bitcoin's strongest month. Since 2013, BTC has ended October in the green 10 out of 12 times. In the peak years of 2017 and 2021, October gains exceeded 40%. If history rhymes, Bitcoin could theoretically rally toward $165,000 this cycle. But this year feels different. Analysts like Kyle Chass note there's a 92% probability of another Federal Reserve rate cut on the horizon, which would normally pump liquidity into risk assets. Yet sentiment remains fragile, and some traders, including psychedelic analysts, warn that markets may dip further before any explosive move upward. Their short-term target? Around $112,500 for Bitcoin before the next leg higher. And then there's Arthur Hayes, co-founder of BitMEX, who argues crypto markets will flip into up-only mode once the U.S. Treasury crosses a key liquidity threshold at $850 billion. Meanwhile, Signal Plus's August and Fan warn that rallies might be muted due to low implied volatility and weak inflows. Even BTSE's Jeff Mai points out that September's lack of a sharp pullback could make October's rally less impressive than usual. We got a harsh reminder of this fragility on Monday morning, when total crypto market capitalization shrank by $80 billion in a matter of hours. Bitcoin sank to a 12-day low of $114,270. Ethereum followed suit, losing over 4% to trade below $4,300. These sharp reversals expose just how vulnerable sentiment is, despite all the bullish chatter plastered across social media. So, where does that leave ICP? My final take is cautiously optimistic. The fundamentals are stronger than they've ever been. Developer activity is thriving, staking dynamics are creating scarcity, and transaction throughput is competing with some of the industry's biggest players. The launch of Caffeine AI could serve as the adoption spark this ecosystem desperately needs. But let's not sugarcoat things. Price action still looks weak, and the broader macro environment remains deeply uncertain. The grandiose price predictions of $1,000 per coin feel more like fantasy than grounded analysis. At the end of the day, ICP's success or failure boils down to one thing: real-world adoption. Not Twitter hype, not technical chart patterns, not staking lockups. Adoption. If Caffeine AI or future dApps bring meaningful user traction, this project could justify the faith of its long-term holders. If not, then even the best tokenomics won't defy gravity forever. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.